In the first quarter this year, we grew by about 32%, and therefore what we are seeing is an improvement in the growth in the first half, and our expectations are that we can at least sustain that growth level in the next half. So if you look at the composition of that performance, our incomes have continued to grow quite well. We are particularly happy with the growth in our fees and commissions, which was up 41%. Our interest income was up 20%. And so what we see is that our overall income growth up at about 25%, and our costs up by 19%, leads us to that performance.
Speaking of interest rates, we've seen inflation climbing to a 19-month high to 14.5% in June. How do you think this is going to affect the interest rates moving forward?
In a sense, they have already climbed. If you look, for example, at the overnight lending rates, if you look at the treasury bill interest rates, which were down at about 2 or 3% some time back, these are now upwards of 6, 7, 8, 9%. This is having an impact on the wholesale deposit rates, which are tracking those very close to those rates that I mentioned, if not higher. And therefore, with inflation where it is, and with the other dynamics around the monetary policy, the tightening that we've seen previously, I would see interest rates essentially remaining where they are for quite a while. I mean, we've increased our base rate from 13.5% to 15% recently, and so we'll continue to watch the dynamics around that, and go down or go up depending on what's happening in the market.
Now, some analysts have said Kenya has too many small banks, and they have said probably consolidation is the way forward. Is KCB looking at acquiring some small banks?
We're not looking at that as KCB, and as you know, we have the largest balance sheet in town today. For us to look at an acquisition, it would have to be an institution that would add real value to what we are doing at the moment. But if you look at the case for smaller banks, again, they've got to look at their own strategy. What I see is that people like owning what they have, and therefore, unless the consolidation is being driven by regulation, or by some non-performance issues, then I won't really say that we shall see sort of an accelerated trend towards consolidation at all. I mean, in my view, it may happen, but I just don't see what would drive it at the moment.
Now, lately you've seen the central bank looking at steps to tighten the space in the country. What particular steps is KCB taking to grow your profit areas as well as consolidate your strong position? Well,
we continue to manage both sides of our balance sheet. We continue to manage our deposits and both the volumes of the deposits and the costs of the deposits, looking at the mix between our various types of products on that side. And again, as we look at the assets, again, we're a universal bank. We sort of are in corporate banking, 50% of our business, retail banking, the other 50%, the wide branch network that we have across the country and the region, and therefore we are into all the segments of the population, and so as we move forward and looking at bottom line, we will continue to look at where the opportunities lie, and just ensure that we continue to grow and deliver returns to our shareholders.
Lastly, Dr. Otieno, regional expansion seems to be the buzz among the Kenyan banks, and you've seen KCB having a wide footprint in East Africa. Maybe you can just tell us, what markets are you looking at moving forward?
We will look at that. It's not something that is on the drawing board as we speak now, but as we stand now, we are still in our consolidation mode. So I would see that if we are going to make any moves, it will be something that happens from 2012 onwards, but not in the next 5 months. I think in the next 5 months, we really want to finalize our consolidation agenda, get our transformation process very much on track and underway, and then look at new opportunities wherever they arise.